It's a fascinating area to build something great and to build something that solves global needs.
Today I interview Dr. Redouane Elkamhi, lead economist at Goat Network.
We are trying to be the place to go for different BTC holder from 001 to whales to earn yield in BTC.
The first Bitcoin L2 to offer sustainable BTC yield.
And we want it to be as secure as Bitcoin Layer 1.
Watch today's whole conversation as I ask Redouane the tough questions. Where does the yield come from? How is this safe?
Yeah.
And of course, if you have BTC, how you can take advantage and get in early.
Means there is always a first move advantage. I'm not creating a FOMO or anything. I'm just saying.
You're being real. You're being real. Click the like button. Thank you, Goat Network, for partnering for today's video. And let's start, Redouane. What's your background?
My background, well, my name is Redouane, as I was explaining to you even before. It's pronounced like red as a color and one as a number. That's the easy one to remember it. Redouane Elkamhi. Currently, I'm also a professor at the University of Toronto. I've been doing this job since I'm a finance professor. I was the first co-founder of the Blockchain FinTech Institute at the University of Toronto in 2014. That's where actually I jumped into crypto. Surprisingly, my original background is engineer. Before I moved to finance, and I do a PhD in finance, and my thesis was on a coding language that turns out to be similar to now what they are doing now in BitVM, which is just see how things is full circle. I don't claim to still know what's going on in that area, but that was in 1998 when I graduated as an engineer, and I made the move to finance. I became a prof 2008 in the University of Iowa, then University of Toronto, as I explained. Crypto for me started honestly just by starting the institute, not because I was believing in it and I started the institute. We started the institute because there was some interest. And when I started the institute, this is actually when I start upgrading my own knowledge and created a course on the blockchain just to, they say when you want to learn something, just teach it. I know it's funny for people, they say, well, the teacher knows it before he teaches it, but actually what happened usually is you learn it while teaching it. And this is when I start also being part of the project. I met the Metis incubator of this project. I was working with Metis as an advisor, and then in the Goat Network, which is Goat ZKM, basically 2 years ago, I'm fully involved in the project. The crypto for me is fascinating because your question was twofold. I was amazed by the simplicity of the Bitcoin when I was reading it. It's the simplicity that makes me, because simple things are usually the more genius ones. The complicated ones are usually the difficult ones to get and easily to hack. And I think this is where I get to it. And coming from finance, I understand quite well the whole cycles, except it seems to be shorter cycles in the blockchain area. And I think it's a fascinating area to build something great and to build something that solves global needs. We sometimes become too centric. I live in Canada, too centric North America, but I'm Moroccan originally, and you travel around the world, you realize that it's solving a global need, which actually sometimes we happen to forget when we live in North America, that many things are available to us, and we say, well, why do I need that? But actually blockchain and crypto solves something that traditional finance couldn't solve for 100 years.
So for
Goat Network,
no, I loved it. That's exactly what I wanted to know. And for Goat Network specifically, for somebody who's never heard of it before, what is it and why is it significant?
Okay. Goat, I think as a project, there is first a long-term vision. We want it to be a universal layer 2, and I may explain really what layers really mean, a universal layer 2 for all L1s. But for simplicity, for people, as you said, that have never heard of us and just want to know what you guys are really building on this phase 1, I call it, think of it as a Bitcoin layer 2, that we try to build an ecosystem for any users who has BTC. If you have BTC and you want to earn in BTC, it sounds surprising because if you have dollars, you earn in dollars. But I want to let your viewers know that sometimes you put BTC, but you can earn cuckoo, and cuckoo may go to zero and you end up with nothing. It means basically at the end of the day, we are trying to be the place to go for different BTC holder from 001 to whales to earn yield in BTC. And we want it to be as secure as Bitcoin Layer 1. It means we look on two angles: sustainable yield for BTC holders and security that is inherited from Bitcoin layer one. I hope this is enough. But then GOAT also stands for GOAT, which is the greater scalability, optimized reward, and advanced technology. I think this is where the GOAT come from, even though it means the greatest of all time too. At the same time, you can choose whatever you like.
Double meaning. And when you say Bitcoin L2, does that simply mean altcoin on Bitcoin? There's a Bitcoin ecosystem or a scaling solution. What do you specifically mean?
Scaling solution. It's good that you make that all. Actually, because there are many definitions of L2s. Many side chains will call themselves L2, state chains. But basically, my simple definition is, think of it as you have like the foundation is Bitcoin, and you build a protocol that scale Bitcoin. Now you're going to be able to do two things for Bitcoin that you couldn't be able to do in the past. Well, what are the two things? Programmability and scalability. Means you're allowed to have smart contracts on that layer, and you're allowed to have more scalability and less transaction fees, but at the same time, it's built on the top. If it's built on the top, it inherits, and here when I say to a certain extent, because this is where the improvement is going to come, the security of Bitcoin. It means, think of it as an ecosystem that is built on the top. It has its own protocol, proof of stake in this case, and that protocol trying to communicate and inherit the security of the foundation, and it's solving two problems: scalability and programmability of Bitcoin. And if you solve these two problems, then you can put, I shouldn't call them problems, to be clear, because the beauty of Bitcoin is that it doesn't have these two. To be very, very clear, I think that could be a longer. The beauty of it is that it doesn't have it. But if you want to generate yield, and if you want to be sustainable as Bitcoin and have mass adoption, then you need to solve these two design that Nakamoto came up with. These two design needed to be extended, but they extended in an area for which you can do whatever experiment you want. You don't want to experiment within layer one because it's too expensive. You experiment in the layer two to build those foundation on the top. I hope it's clearer.
It's very clear, and I want to earn yield, and I love Bitcoin, and I want to earn yield on Bitcoin. My question is, where does the yield come from? How is this safe? Because crypto has been burned before with the Celsiuses and the centralized entities.
Anytime it's too good to be true is never true. Like when you hear something, give me Bitcoin and you're going to earn 50%, 60%. And those are basically what you talked about, more of the BTC lending protocols that actually take your BTC and take it somewhere else. And when they take it somewhere else, now they take in much more securities, and those collateral, actually you have liquidity shocks. And I don't want to get into I don't want to hammer on the two examples you build in, but your question is actually comes to the core of what GOAT is doing. When you ask me to define GOAT, I actually stay away from the technical side, but here actually I needed it a little bit. What makes you, because actually these days you wake up, Austin, you can see almost every day a new layer two. Like literally everybody will have like, we're going to have a system for which you're going to click, oh, I can create a layer two, I can create a layer two. But I can tell you, like, if you ask me what's the defining feature, which is going to come from the one we're going to generate sustainable yield. Your question is on yield, but I need to explain some of the specificities of what we do in order to get the yield. The specificity that we have, and it's unique, that no other L2 is doing. Now there is around, to my experience, 43 that actually claim themselves to be L2, claim. Some of them, yes, they are trying hard, and some of them existed for many years. But there's one distinguishing feature that we have that they don't. And this is where it's going to be important. Every layer two have agents. Think about it as agents. What are these agents are going to do? They are actually, think of them, they're the agent that are going to operate the system. Call them your favorite word. Call them sequencers, operators, whatever you like them. For simplicity, let's call them sequencers. They take these transactions, they operate them, they approve them, they send them to Bitcoin. They do the job to maintain the network. We don't have one, we have many. Why we have many? Because we allow decentralized sequencers. No others doing it. Everybody's more centralized in this entity. Are you going to tell me, Austin, well, what has to do with the yield? I asked you about the yield and sustainability, and you're actually telling me a unicity about sequencers and decentralized sequencers. The reason why I went to start with that, because of unicity, because now you have BTC and you want to basically earn some yield and you call it sustainable. There's nothing more sustainable than the fees earned by the network itself. Mm-hmm. And now I'm telling you, I have an open market of sequencers. You, Austin, you're going to come and you have a choice. You can have 5, 10, 100 sequencers out there. And you're going to realize, well, how much the sequencers, if I stake there, they earn on average? Well, they earn double digit, 12. The other sequencer, 15. What distinguishes this about that? Well, that one share more whatever they earn. But why they share more? Because they know another guy actually may jump in and be able to share more. And because we create competition across sequencers, we make the reward optimal, not by imposing to be optimal, but by creating competition who actually become a sequencer. It means the old wisdom of competition drive value for consumers. And the people don't talk about it in terms of that, but they call decentralization. But decentralization actually creates competition in this case, and competition in this case creates optimized yield for the users. It means if you have 001 BTC or 1,000,000 or 1,000 BTC, you're able to become a sequencer or stake in a sequencer and earn the fees that the sequencer are earning. And in what unit they are earning these fees? They're earning it in BTC. It means you now, when I'm going to tell you, you make 12%, 14% in that sequencer, 14% as a unit of BTC. Plus some gold token, we'll get into that, but at least you have to know, you as a user don't want to get complicated. I have a place that they compete with each other. I have a choice to go to each one that give me better return, and I don't have to lock. If tomorrow the other sequencer is better, I take my stake from here, I go to the other sequencer. But this sequencer says, oh, I shouldn't be stupid. They're going to have a run to me, run to the bank, run to the sequencers. If they're going to have a run on somebody, they have to incentivize them better, either by putting more stake so that they can say, look, I'm putting more at stake myself. Or I'm saying, no, I'm not going to put a lot of stake, but I'm giving you 100% of returns or 99% of returns. And that's how you're going to create sustainable yield. This is a convoluted, long answer to tell you that competition, decentralized sequencers, create sustainable yield in BTC because now you share in the network ownership. You basically, any users can become owners of the network. And that's how it is sustainable, and that's what's unique for us.
Let me see if I got it. The network fees, which are happening anyway, that's where the yield comes from. That makes sense to me.
Yeah, that's BTC, yeah.
And when I'm putting my Bitcoin and becoming a sequencer or putting it in a sequencer, it just stays there as my stake in that sequencer. They don't do anything with it?
They don't do anything with it. No, okay. But let's answer the first question. If they stay there, you're going to earn whatever they earn.
True.
And then whatever they earn, you get a piece of it. But whatever you get a piece of it, you're going to get a good piece of it. Why? Because if they don't give you a piece of it, you're going to just take it the next day and go somewhere else, and you're going to get a piece of it. Do you see why I talk about competition and decentralization?
Yeah.
Because it buys you two things. It buys you liveliness, because if you have one sequencer, what happens if they shut down? You stake, but they shut down. Then the whole system shut down.
Yeah.
And then the majority of L2s right now, if I don't say all, have one central entity. The BTC comes in or whatever fees comes in, and then you have one entity that is going to do the job, and that entity decide to give you whatever they want to give you. For us, is the market that competes so that you can get. I hope you get. Now you ask another. Is that okay? Can I elaborate on?
No, I loved it. Yes, keep going. This is great.
Because you said, can they do anything with it? I will say, can you do something else with it yourself? This is the risk taken, because now it's step number one. What you did, you deposit it there or stake it or lock it. That's going to allow you to earn some fees. What we have in our network is now each sequencer can create a yield-bearing token, because now that token that is staked can generate yield based on the sequencer reward that are based on BTC, correct? They will create one, we call it in the beige paper and stuff, YBTC, like yield BTC, a BTC that is able to generate yield. Now, when you have that YBTC, every application that you have in the network is asking for that YBTC as a liquidity provider of YBTC. For example, one of the applications we have could be collateral lending, smart collateral lending. If you deposit YBTC, you basically can able to have dollars, and it's smart. Why? Because the people can use collateral smartly. Another application will be like what you see in Pendles. You can take one BTC and decompose it into a yield token and a principal token, and you have activities over it. You can have a prediction market that wants you BTC. You can have those applications now are you're channeling your YBTC created by you locking in sequencer, and you can have a thriving ecosystem because you connect in the sequencer reward to all the application that you have in the network. It means call it a double benefit. They don't have to do something with it, but you can do something more with it. I'm refining hopefully what you're saying.
No, I read you loud and clear. And that brings me to another thought. What challenges do you foresee? Like, is incentivizing participation at the beginning, the early stages of the toughest part, for liquidity? What do you think?
No, I think there's one thing you didn't mention. The challenge I see right now is, I answer you and I dive into something else first, because something else that hit me when you were discussing it with somebody just yesterday. First, this is the challenge of every starting project, like the chicken and the egg, or people call it the flywheel, and how do you start the flywheel in order to make everything happen? Simply, you'll say, look, we do what everybody else do, which is the simple thing. Look, we're going to have an allocation of token that is going to be to incentivize people to come in. The second, it's EVM compatible, which means the cost for any application to come in, it's easier. They just have to do the magic copy paste that everyone on the world loves. Copy the code, paste it somewhere else, and everything is working. It means the entry cost is easy. The incentives in terms of token is easy, but that doesn't distinguish me from anybody, from the majority. I'm not talking anybody else. Let's say the serious project out there, the serious project that is out there or not. Now, what I was talking to somebody yesterday, what the major problem we have, like I will talk about something very key, which we produce, which is called proof of activeness protocol. Proof of activeness. I think the name said it all. The more active you are as a user, the more you prove you're active in the ecosystem. Means you go to this app, you go to that app, you go to that app, you go to the sequencer to stake, the more your score, Austin, is going up. And the more your score is going up, the more you boost your reward. It means now I'm establishing a score to you as long as you're alive in the network that incentivize you to stay longer with this app, because it's not a trade-off. You're not saying if I'm in this app, I'm losing my sequencer reward. In fact, you're saying the more I'm doing the apps, the more I have more weights. And when I'm going to stake in the reward, I'm going to earn more reward. It means I'm establishing, because I was thinking about this a couple of years ago, people call ecosystem. But then the first thing you think about ecosystem, you think of gravity. What is the gravity between the planet and the apps in this ecosystem? And there's no gravity. It's almost like you put something and everybody's doing his job and there's no connection. And what had hit me one day, I was saying, look, when the team we're working with, we're saying, well, we need to create something that incentivizes these apps. Well, the entry cost is easy because it's EVM, but why are they going to be there? Well, they're going to be there because they know they're not, there's no opportunity cost. By being there, I'm missing on the sequencer. In fact, it's a double compounded. It means you've got this as something we established is going to help us to incentivize user to be with the apps, and that's the chicken and the egg. As I said, I gave you the things we're thinking to solve, but your question had one channel. What challenge, what worries you more? Let me tell you what worries me more, and I've been in the market as working on it for quite a long time. What worries, people are doing this calculation. I think everybody's trying to look at the market. They say, what? Let's look at the L2 in Ethereum. It's a little bit more established. What's the market value of those guys? Well, it's around 78. I'm not going to give because I'm going to look like a nerd if I say 83.7. Because the people say, what the hell, like it's an interview. Like, let's say $90 billion. $90 billion worth of L2 in Ethereum. And then people say, well, Ethereum, already programmable. We don't need the programmability to scale it. We just scale it because the fees was high, and it's still $90 billion. Okay, Bitcoin is double or triple the market cap of Ethereum. Plus, it requires more programmability. Plus, these people will just sit in idle, and now they need more. But just if we are conservative, let's multiply 90 by 3. Let's do some math very quickly. Just say 200 billion or 250. And everyone is saying this. If I just get 1% of this market cap, I'm going to be so rich, financially free, and I'm going to go to the Maldives and be all good. But everybody make this mistake in the internet bubble, in the tulip bubble, in every bubble. Everybody says, if I get 1%, the problem is that you don't get the 1%. What happens is winner take all. In fact, it's an oligopoly. Few projects may take all, and that's what always happens in a bubble environment. My problem with this, when you ask me what the challenge is, it's going to take some time before many L2s will flash out. And the problem of this market is not mature enough. People just hear security, scalability, oh, they're all similar. And I'm going to tell you, whatever those that exist, only 2 or 3 that can claim they're trying to inherit the security of Bitcoin. And they are centralized, which means the cost of security is so high. We can talk about this more if you want later, but I'm just give you with one thought. In the past, it used to be very simple things. In the last decade, economics didn't play a big role because we're all focused technology, but now we're going to have multiple players in the ecosystem. These players are not just users. I'm talking about provers, challengers, publishers, executors. All these needs to exist. For L2 to inherit the Bitcoin security, they need to have these agents. And these agents have conflict of interest between them because I want to be a sequencer because I have MEV. I don't want to be a challenger. But if I don't have a challenger, you don't have an ecosystem that actually can work with BitVM. And no one want to do the role. And you cannot have central entities. The beauty of our design is we can be able to have cheaper way of generating the highest cost, the highest security possible with a cheaper cost. And whatever rent we're going to have out of this will come to the users. It means my challenge is it's going to take some time for the bubble on L2s to die a little bit, and people start not making the mistake. If you just get 1%, I'm good, because it's not going to happen for many. And that's a little bit, we need to wait a little bit for that to happen. And it's okay, we're planning for it, and we're trying to be sustainable, trying to be solid, and not just to take a wave and basically catch something that it's not there. That's actually, I answered you first the question, but I told you truly what the challenge is in L2 right now.
And you mentioned team, and we actually didn't get into this. What is the team? Obviously, you have a pedigree in finance. Who else is there?
Well, I can actually even simplify for the viewers the team in being like 3 divisions. Think about them as 3 divisions. There's a team that is dedicated on security, because you want to have security, programmability, and economics. And I told you the vision we have is the next decade is going to be, if the old decade was 95% security and technology and 5% economics, I think the next decade is going to be a 50-50 economic design and security. They have to go in tandem because the players are many, and it's going to be multiple stakeholders, and the multiple stakeholders have conflict of interest. And the GOAT team have decided to basically have these 3 divisions, almost like thinking deeply about the project. I will call the security team is known as ZKM team, House of ZK. You can even go to our GOAT network and go to the ZK, and you're going to see what we have established in the last 2 years. In fact, people know us more about ZK than know us about GOAT. Just to tell you that the funny part here, the GOAT is like the biggest thing that we're trying. It's a user thing. It's the money hopefully making place. It's a business unit of it. But the security is ZK. What is this team about? This team is run by cryptographers, scientists, programmers. What's their goal, Austin? What's the goal of this team? Truly, the goal of this team is to be a center of excellence when it comes to, we cannot be center of excellence in every technology. We have to make a choice. Every project make a choice. Our strategic choice is to be ZK rollup in Bitcoin, to become the center of excellence when it comes to ZK rollup on Bitcoin. To do that, you need an OCP, the optimistic challenge. To need that, you need the ZK map. We have developed already the ZK map. It's there. In fact, we even have a benchmarking last week. I'm just talking about division number 1. We have a benchmarking last week with Risk 0 and SP1. We actually do better in terms of cost for Risk 0, and we do better in terms of speed for SP1. It means if you notice our division that is specialized on security, for which we count on inheriting the Bitcoin security, we are already at the forefront of technology with the best that are dedicated only on that. Means that's part 1, which is security. Part 2, which actually you talked more about. Me, I do both because of my background a little bit. But we believe that if you don't have a good design in economics, you're going to end up with the higher costs. And the majority of L2s will end up doing this choice a year from now. Now they're going to all show up with airdrop and all vibes and spend a lot of time marketing. And what's going to happen is this. They're going to run when they're going to start to see when the people are going to flush out all the farming airdrop going to work and now what is sustainable? It's going to be this. It's going to be, gosh, we claim to be the security inheritance, but that's almost impossible. If we do that, we have no money left. The choice is because it's going to be too expensive to run in a centralized, concentrated entity. And they have to make a choice. Even lower security. And in that case, they're going to say, look, maybe we have built enough reputation that you don't even need security, because today when you go to BlackRock, you don't ask much about security. You go to Manhattan, people already have built in. Maybe that's a strategy. Maybe it's going to work. At some point, they're going to establish a good reputation that they don't care about security. But that defeats the whole first point of the blockchain, in my view. But in our view, in this division of economics, is to say this: when you have a competitive, decentralized market that everybody is playing a different role and they compete for the highest role, not only you have a cheaper cost of monitoring, that anybody is monitoring anybody, you also end up having the higher return for the users, because they are forced to share the reward with the users, because that's our business plan. It means that's the team number two. Team number one is about security. Team number two is about economic design. They work together. And of course, you can't do nothing without veterans' go-to-market strategy. And the go-to-market strategy, we are the one, I think Metis has been in place now since 2021. It's the same growth strategy that was working in Metis, and this project basically have been incubated first by Metis, now it's alone. And many of those guys actually now work with us from the incubators. It means we have experience in all aspects of it, in having great relationship. We already have a track record in making our VC. They made a tremendous amount of money with us on the Metis network. It's still alive. It's still, as of today's price, the VC, if you look at it, is already 20x. I'm not talking at the peak, it was 100 or 200. Even as today value, we're talking about 20x for people that invested early. It means the divisions, sorry to be long, and this is maybe the sin of being a prof, sometimes we explain too much. It's basically having a division on security, a division on economics, and a division of go-to-market. And my claim is, I have not seen, at least from the public information, that there is a division of economics in anybody doing the L2 right now, because the economic for them is one page. I don't want to come across as I'm just talking about the publicly available information, the things that I have seen in my limited amount of time. And I may be missing a lot, but I was always shocked to understand that economics is only one page called token economics, and it just shows the distribution, 2%, 20%, 10%. That's not economic, that's just distribution of things. How do you incentive things? How do you design your system? And I think we have made this call. We hope it's going to work. But again, you need to survive the bubble so that you finally look at your sustainable. Because when there is a whole bubble of L2s, it's going to take some time before things flash out and the good ones survive.
And what is your roadmap? Like, are you going to go fully live in 2025 or before?
2025 fully live. TGE testnet, I think, is next week. I don't know where this is going to come.
It's going to come out. We're filming this right before Token 2049. It's coming out when we're both at Token 2049.
Okay, then it's coming up around Token 25. It means next testnet is coming live. And basically mainnet is Q4, likely November, end of October. And then the token generation will be in the beginning of 2025. That's our phase one. It means this is, it has taken some time. It has taken 2 years for ZKM to develop all the stuff, to be ready for whatever transition, because we're going to see a lot of transition in Bitcoin, Austin, you'll see this. There's a lot of advancement. There's a lot of good thinking going there. There's a lot of smart people in developing like a lot of new things. And if you don't have a dedicated team that can take the best, because you can't do everything yourself, you have to be able to quickly, we call it a sponge. You have to be a sponge that whatever there is something, you pick up as a sponge and you implement it. And but we make a strategic decision, because you cannot learn everything. Strategic decision is becoming a center of excellence in the ZK rollup, which is going to be inheriting the security and building a financial ecosystem as an application as a BTC place that any heterogeneous users, from small to risk averse to less risk averse to big, can go and earn some sustainable yield.
And TGE, that's for the GOAT token, which is different than the yield bearing token wrapped BTC. So what is the GOAT token? This is a good question, actually. That is I may even go further. Like, people can even ask, and it's a fair question to ask, why do you even need a GOAT token? You don't even care, because if your fees is actually BTC, earn BTC, why do I need Cuckoo or GOAT or any things like that? Who cares? I'm going to tell you, actually, you need it for the protocol for one reason. First, let me give you the generic answer
for anybody who doesn't want to get into the details of the Byzantine consensus and all that stuff, the generic answer is GOAT token serve three purposes in our ecosystem. The first purpose is when I said you earn yield in BTC, that's only one part of the return. You still earn, because you're there, you still earn some part of GOAT. And the more, suppose me and you have 2 BTCs each, okay? As BTC, I used to go, suppose you earn 1,000 BTC, 2014. You know what I'm saying? I suppose you have like 2 or 3 BTC, just to be fair, and people don't, like I have students for which I start saying 100, Redouane, you and like kill, what are you saying 100? It's like I go to the moon. Suppose we have like 2 BTC each. And then both of us are the same. Both of us gonna, suppose we choose the same sequencer, ABCD sequencers. We go to ABCD sequencer, both of us deposit there. You assume you're gonna earn the same thing. I will say no. You can earn more than me, or I earn more than you, depend how much GOAT I have. It means GOAT is going to be boosting the reward in BTC that you're going to earn. I might earn 0.5. You may earn 0.6 because you have more GOAT token than me. Point number one. It means it's a boost in reward that has some utility for having it. Second, remember we have multiple sequencers. Mm-hmm. How are they going to be chosen to, today you choose this, tomorrow you choose that, after tomorrow you choose that. Not tomorrow, I'm saying in a 2-second environment or a 10-second environment. The more you put at stake as a sequencer, which is the sum of whatever you put versus whatever anybody that come to you and stake with you, the more likely you're going to get chosen to operate the transaction and to earn money. Fair, the more at stake, the more you get chosen, the more money you will make. That likelihood to be chosen not only depend on how much BTC you have at stake, but also how much GOAT token the users have that stake with you. Utility number 2, which actually translated on to more reward, because the more you get chosen, the more you make money, the more you make money, the more you actually get paid. One is for the pie gets bigger, and one is how do we share the pie between me and you. Point number 2. Point number 3 is very important, which actually only require GOAT. Doesn't require anything about BTC. Because we have an L2 and we produce blocks, it is not like a side chain. We have a protocol that is going to communicate with L1. You need a limited supply to create consensus and to create, not consensus, sorry. Yeah, consensus, to create majority. Let's say, if I want to say, if 2/3 agree that the block is correct, then that block is correct. Well, it has to be on something that we know exactly how much is in circulation and how much each one has, because if you do BTC, what's going to happen, Austin? You're going to lose track of what is 2/3. What is 4/3? It means GOAT token has a consensus protocol that is inherent to how you produce block. It means 3 points. One is the production of block, one of boosting the reward, and one of making the buy bigger for that sequencer. That's what is our GOAT token. Hopefully I address it enough.
No, that was very clear. And what does success look like for GOAT Network in 3 to 5 years? How significant could this be?
Honestly, this is not really a question that we agreed on or anything. Like, we don't agree on any question, but the 3-4 years, I love it, because some people ask me the question, well, how it's going to really look like in 3 months. And I'm going to say, I'm not even live in 3 months. Because of the word sustainable, because you see me talk in economics, you see me talk about the bubble, I know you read in my mind. I think, to me, this is a serious project. That's why I'm actually part of it also, because I really want to do something as part of this team again that makes sense. And for that, I think it's going to be some years. The success look like first in phase 1 is becoming any users who has BTC and want to have a risk reward trade-off, because people don't think like that right now. They take, for whatever, if I want to have, I don't want to go to a place I'm going to make 100% and then I may lose it all. But some people may do. Some people may say, look, I wanted a place for which I want to do that. I want to create heterogeneous return for heterogeneous users. That's anybody who want to sit there says, if I believe in security, if I want a very secure place, if I want to share the reward of what that place make, the only place that I think is going to be stable, equilibrium for a long run, that's a GOAT network to make sustainable yield for every single users from 001 to 1,000. That's point number 1. That's hopefully in a year and a half to 2 years from now. My hope is the long-term vision, which we didn't talk about it. And I try actually not to talk about it because it stays as a vision too. But there's a little bit more than a vision, is to become an L2 for all L1s. It means finality now, and that's to solve the problem of fragmentation of liquidity. We don't need the problem of fragmentation of liquidity because now, by the way, the Bitcoiners are just sitting idle. I just want them first to move them. I want them to start trusting. There is a place, the miners, the whales, the small, to be able to make some yield. But it's more than a vision, and I'm going to tell you why it's more than a vision. Because it's a concrete vision. If today, actually, now after the interview, just Google, go to ZKM, go to their website, go to white papers. You're going to have two white papers. One paper is going to call ZK MIP that I talk about, and we have shown that we're actually competing with the best. But there's another white paper. It's called Entangle Rollup. And the Entangle Rollup that we actually produced is something that allows communication with different networks. Basically, the ZK proof that we're going to produce is going to be understood by different L1s. It means we do have concrete step, like just so that people and the viewers, and there's nothing to do with Hope Phase 1 now, and we hope to sustain it without that vision. But since you asked the 2 to 3 years, I had to tell you it's not just a vision, that we are not just dreaming. We already have a white paper on the specificities and the theory. We already in the implementation stage of that, but it's going to take some years. The entanglement, the idea that you're going to have one L2 GOAT, but it's going to be able to communicate with BTC, with Ethereum, with the Cosmos, with Don. That's a futuristic idea that already we have step one, which is developing what we call an entangled rollup. It means phase one is becoming the market that users come to generate sustainable yield with knowing how much risk they're taking at each point of time. And phase two is to have this possibility of defragmentation, fragmentation of liquidity solved too. Hopefully that was clear.
You're making sense. You're making sense. My question to you, Redouane, what haven't we mentioned? What didn't I touch on?
Oh, I think okay, the things I actually like a lot the questions you ask, because the majority of people just start with, what are your partners? What are this? What are that? It's almost like whatever project X, regardless of anything in it, just what are the partners so that it's going to make money. But it's going to make, that's more of a, I call it the beauty context type of things. The beauty context is what this Keynes theory that you vote for whatever. You basically trade whatever other people like. And you have certification, if you have other people with you, that means you're good. And that's a certification game. I think the partners, we already established very strong partners.
Who are they?
I think we have, partners can be different things, like the investors already. I think OKX was one of them. Crypto.com was one of them. The miners, we got Embers, not the miners, I mean the sequencers already committed a lot of, we have committed thousands of BTC right now at first stage. Some of the sequencers are Embers, Hashkey, Bimmo, as a big community in China. Like we have some strong partnership already, both in terms of who's going to run some of the sequencers first, because before opening the market, you need some people starting, and these are the one I mentioned, the Ember, Hashkey, Bimmo, and I forgot the other two. And because now we have 5 committed out of 7, because we're going to launch only with 7 before opening the market to everybody. And that's already, like we have mentioned the word 5,000 BTC already committed, but we are still debating, do we go with the 5,000 first, we go with less to keep, there's some strategic decisions to be made on those. In terms of investors, I mentioned to you, OKX and others, it means we already kind of been, we are just rising the pre-A. We have made money for our investors previously, and I think now we're just going to have a pre-A round. We believe in lower valuation because we want everybody to make money, because we're just going to use the money for where it's actually used. I think we talked about the team. I don't think we forgot anything. I don't have anything in mind. I think come visit our website. Please call us, communicate with us. You have 2 places to go. You want the economic part, you want the hardcore theory part, ZKM as a division, GOAT as a mother company. I think we're here to communicate with you guys, and we're here to be the place that people come to for something hopefully very, very serious.
So maybe you just said this, but there's many people in the Altcoin Daily audience that have some Bitcoin and they want to earn BTC yield securely. How can they stay in touch?
Well, this is, you just mentioned, I just mentioned it right now in terms, those guys should just come to, well, now it's not live yet, but when the main, I think first they have to come, there is the club that we already opened for all the users to come and to understand the ecosystem. the second part, I would say, come to our website, log your BTC and earn BTC. And generally, I will say there is a first move advantage always, because if you do a little bit of math, you're going to know that if there is transactions and it's shared by few amount of people, because in the beginning there is less people, but because we share revenue, that's different than other places. If you share revenue from the sequencers, the less the people in the beginning before, because the transaction goes at the same time. It's not like at some point it's going to be very little, but there is always a steady state. But before reaching the steady state, it's going to be high. It means there is always a first move advantage. I'm not creating a FOMO or anything. I'm just saying.
You're being real. You're being real.
I'm being even mathematically consistent. I just want to tell that does not happen somewhere else. It happens somewhere else because of airdrops. But for us, it happened endogenously, because if you have transactions, and now you're going to share as a user the transaction because it's not centralized. And if you share the transactions, the less you are, the more transaction, the less you are, the more you earn. At the end, we have to go in tandem, but in the beginning, it's going to be more.
Redouane,
endogenously.
Yes, thank you so much for sharing your time. Links for all your stuff, the website, everything down below. I feel I have such a better understanding of Goat Network after this conversation. Final thoughts for the Altcoin Daily Army.
Final thought is you're going to have a lot of L2s to choose from. It's going to come a time for which it's going to be L2 per day or L2 per minute. Read more about don't trust everything you read. And you started your conversation by saying, if it's too good to be true, it's usually not true. Like sometimes when you hear about these fantastic yields and stuff like that, just read if you're really secure or not. And focus, zoom in on the economics component, zoom in on the cost of the economics and how sustainable things. That's my active message for people for the next decade. Last decade was only security and technology. This decade is going to be economics and security going hand in hand because of the multiplayers. And thank you for inviting me again. And thank you for the.
I hope you come back. I hope you come back. This was very educational and informative.